What we're going to do today. Finish chapter 7, internal control. We might not finish it, but we'll give it a shot. And then we're going to start the sampling practice exam. The sampling practice exam will be very similar to what you're going to get on the regular exam, the sampling exam. So this is going to be the practice exam. So it'll kind of give you a heads up and a little bit of a roadmap when you're doing the other one. Okay, save that. So let's pull up chapter 7. Okay, so I think we just did the first page. Okay, so internal control. Set of policies and procedures designed to achieve management objectives to operations, reporting, and compliance. And if you recall, those are the three kind of audits that we have. Oops. So the objectives kind of follow the three kinds of audits that we do. Financial audits are the one we concentrate on in this class, but there are other audits. Hey, what happened here? How come that's okay? Okay, auditor's responsibility for internal control. There are two types of audits that we'll find when we're doing the year-end audit. The financial audit is oftentimes combined with the internal control audit. So, and this is generally for issuers. You can do it for non-issuers, but usually they don't. But issuers, they have an internal control audit. So just to make the point, if it's a non-issuer, if it's a privately held company, they generally get one audit. It's a financial statement audit. If it's publicly traded, they'll have two. They'll have the financial audit, and then they'll also have an audit on internal control. Sometimes reports are combined, but a lot of times they're not. But anyway, so publicly traded companies, they'll have a financial statement audit and a internal control audit. So they'll have two at year end. So everyone gets this one, the first one, the financial audit. If you're publicly traded, you also have the second one here. Now, financial statement audits are generally historical in nature. I don't know. You look at the past. How much did you have in sales last year? How much did you have in expenses last year? Well, you know, how many goods did you sell last year, and all that kind of stuff. It's all historical. It's what happened in the past. Scope, we test relevant control activities if we are relying on them. So there's an if here, there's a qualifier that you only test those if you're relying on them. There is no opinion on internal control. We mentioned it in the audit report, but we don't actually give an opinion on it. And we evaluate the effectiveness of internal control throughout the year. And what I mean by that is that it matters what the controls were in January, because you had sales and you had expenses and all this stuff going on in January. So it depends on what the controls are in January. You know, for you, how much you're going to be able to rely on them for the financial statements and all that kind of stuff. So the internal controls are throughout the entire year. You're looking at whether they were okay or not throughout the entire year. Okay, the internal control audit is future oriented. They are the controls that will be in place to start the next year. You want to tell people, what are the controls like right now? Okay, and unlike the other one, because you're reporting on the internal controls, you must test each relevant control activity each year. So everything gets tested every single year. You'll give an opinion on the internal control. This is a very different one, though. You'll evaluate the effectiveness of internal control as of the fiscal year end. So we're telling people at year end, what were the controls like? You know, good, bad, whatever. Okay, let's do, well, let's go to A. The material internal control weakness was discovered by the client on August 5th. The control weakness was eliminated on August 8th. Assuming the client has a year end of December 31st, which audits would be affected by this event? Anyone? You put it in the chat.
The financial audit?
Yep, good. Only the financial audit. The internal control audit is as of year end. Well, as of year end, they had fixed it. They fixed it on August 8th. So at year end, the internal controls were fine. Now the financial audit has a problem because up until August 8th, they had problems with the internal controls. You can't rely on stuff made throughout the year up until August 8th, or have less reliability or whatever the control was. Tests of control for the year-end financial, or excuse me, start again. Tests of controls are required for the year-end financial audits of
issuers.
Yep, good. Only issuers, because they have this internal control audit. Now, it is possible that they have their internal controls looked at if they're not issuers, but it's required for issuers. Okay, control environment factors. You remember this by IC Hambo, which is exactly the same as the one that they had for me when I was going through. So IC Hambo is, we remember it. And this is the environment in which we, in which they operate. And when you think about the environment, think about like that Anthony video, what the environment was. And that's what they're kind of talking about here. What was it like? What was it like the environment that they worked in. Integrity and ethical values, commitment to competence, human resource policy, hiring. I mean, these are all in there. 7 to 30 responsibility. And this is probably this is probably the biggest one there that they have a problem with is management philosophy and operating style. Do whatever it takes to make the numbers, whether it's right or wrong, or it doesn't matter. And I thought it was really interesting that Anthony actually said that, for many management, it's like, well, of course it's right, yeah, it has to be right, yeah, we dealt these things, and that's what we should have been doing is, board of directors and audit committee, how much oversight they have and the organizational structure, those are all part of the environment, and the environment is really important. Okay, control activities. This used to be called PIPs. No, I don't know. I call it PAPIs. I don't know if it's I don't know what they're calling it in the CPA reviews right now, but okay. So physical controls, those kind of what you just think of. Secure areas, access cards. And that is physically, how are you controlling things? A lot of times you'll see like if a store sells expensive stuff, let's say they sell jewelry or watches, they'll have it locked up. And sometimes if it's expensive enough, they have to have 2 people come over and unlock it, or whatever it is. And these are physical controls. They physically keep people in or out of, I should say in, but keep people out of things they shouldn't be in. Okay, authorization of transactions. And so clear authority to authorize transactions, in other words, having somebody responsible for it. I'll tell you one that I ran into in an assembly plant. You want to have people to authorize things like purchases, right? This assembly plant had a policy. It was computerized that they had 9 managers in the assembly plant. All 9 managers had to approve every purchase. So is that really good control or not really good control? There actually is a problem with it. Yeah, let's say that you could, in most places, by the way, would have 1 or 2 people authorizing it, and usually it's for if there's 2, it's because it's it's more than $5,000 or something like that. There's actually a problem with having 9 managers approve all the purchases. So if manager number 4 wants something, all the other managers approve it. To approve it, what's the problem with that? What's the problem? You have 9 people approving something. I'll tell you, I actually wrote them up for it as an internal control weakness. Then no one's responsible. And I would be in the office talking to these people, and they would be sitting there clicking on all these purchase things, talking to you, and no one was looking at anything because, there's eight other people, and I don't know if they need this or not. No one ever even looked into things. So it really, instead of assigning authority and making sure that really that this is a good thing, what it actually did is absolve anyone from any responsibility. And so you got to be careful. There is something in internal controls that more sometimes is less, and that I'll give you another one that is it runs into the same kind of problem. It's actually a little bit different vein, but passwords. How often should people change their passwords at work? People say, okay, well, maybe, every 3 months, every 2 months, whatever it is. So, well, let's make them really good. Let's have them change them every week. And I've actually seen places where they change the passwords every week. What's the problem with changing the passwords every week?
What if you forget?
Exactly. People forget. So, what do people do? They write down the password and they stick it on the computer.
Mhm.
So there are some, you think, okay, well, that's really good control. Every week they have to change your password. That's great control. It's actually not that, so you gotta be, it does take a little bit of thinking on some of these. More is not necessarily better on a lot of it. Okay, performance reviews. These are not really for employees so much as this is usually budgeting reviews. Usually things along the lines of capital budgets, sometimes called appropriations. And these are plans to purchase large things. Close. Property, plant, and equipment. So budgeting reviews, comparing budgets to actual amounts that are paid, and also capital budgets are another big one. And that is, if a company's going to spend a lot of money on something, it should be on the capital budget, usually the year before. You don't just go willy-nilly and go out and purchase an assembly plant. It's usually a lot of planning goes into that, and it should be on the capital budget and so on and so forth. And budgeting reviews, comparing budgets to actual amounts. This is actually a control activity. And here's why. Not only is it controlling the spending, but you can also do things like catching errors. So if somebody, where's my stapler? Someone stole my stapler. Okay, let's take the scissors. Let's say the scissor costs $6 and someone accidentally puts it in as $6 million. Okay, well, there's a material misstatement. But the question is, how do you find that? Well, it's going to hit somebody's budget. And someone's budget is going to say, where did the $6 million charge come from? Why am I getting hit with a $6 million charge? Okay, it's an error. So it is a control activity is not only to control the cost, but it's also you can find errors in it too. Information processing, this is like computerized systems. And they can have a number of different things that they can have. A lot of times they're input. Oops. What are you doing there? Input controls, there could be obviously controls as far as access. There could be drawing a blank on it. Okay. Controls that look for reasonableness, I guess. Maybe I'll put that in there. That's not actually what it's called. But like, so input controls, that you can't put in negative numbers or something like that in for inventory. Access, who gets to access it? Reasonable amounts. I can't spell etc. right. These are all kind of controls that they have in processing, and they are used to either prevent or detect errors. So prevent, you can't put in the wrong number. Detect, after the number's put in, it spits it back out and says, oh, wait a minute, this doesn't look right. Segregation of duties, we talked about it a lot, but we'll do it again because it actually is probably one of the most important ones, and that is risky assets. And remember it by car. And by the way, the segregation of duties, this does have implications up here. For instance, those people that have access to places that are physically controlled, they have access to the assets. And down here, the authorization, you don't want to have these two activities combined. Physical controls and authorization of transactions. Those are things you keep separated. They're control activities, but they are kept separated. Question on that? Okay. Auditor's understanding of internal control. How do we get an understanding? First of all, let me add something to this. So auditors are required to obtain an understanding of internal controls. Now, this is different than Tesla controls because Tesla controls when you're going to rely on them. So every audit, you have to get an understanding. Every audit is required to get an understanding. Now, if you're going to rely on those controls, then you have to do Tesla controls. But if you're not going to rely on them, you still have to get an understanding of the internal controls. And you might say, well, why? If we're not going to rely on the internal controls, why do we have to get an understanding? You have to get an understanding to know where the problems might be. So if you get an understanding of the internal controls, if there's, say, a weakness or something like that, it might indicate that, okay, we have to do more testing, substantive testing here because these internal controls, our understanding of it is that, no one's authorizing returns or whatever it is. So you are required to get an understanding. You are not required to test the controls unless you rely on them. Kind of a fine point, but it's an important one. Okay. And these, I think we talked about these before. I can't remember though. Inquire, ask people. In auditing, you do a lot of asking people questions. Inspection, looking at the documents. Observation, watching. And tracing transactions through the information. Okay, of these 4 items, which one or ones are probably the best? Did we talk about this before? I thought we did. So inquiry, asking people. Inspection, looking at documents that people made up, the company made. It could also be third-party documents. Observation, watching what people do, and tracing.
You're asking which one is the
Which one's the best? I think I talked about this. Which one is the most persuasive?
oh,
We talked about this? Maybe I didn't. The things that you do yourself are the most persuasive. So for instance, you might talk to somebody. What do you guys do for when someone returns a customer returns some items? And they might tell you, oh, this happens, this happens, this happens. You go watch, it might be completely different. This is probably the best of all of these. I'll say this is probably the first best, we'll say, because you're actually watching them do it. And down here, tracing is probably the second best, because tracing items through, you're actually tracing them yourself, going through the operation. But those things that you do, that you actually observe, or calculations that you actually perform, those are the most persuasive. Because you're actually doing it. That was my Zoom meeting from today. It's the graduate. You don't want to bomb the video bomb the graduate council. That's the thing. Okay, so those things are most persuasive of the things that you do yourself, not things that other people do. And you'll notice these first two here, inquiry, this is somebody else telling you what's happening. Inspection and document, this is something else, this is something that somebody else did. You didn't actually make these documents, somebody else did. So those things that you do for yourself are the most persuasive, are these other ones. And a lot of times it's not that they're, when you ask somebody how to do something, I ran into this, I can't tell you how many times. You'd ask somebody, what happens when when someone returns this? What happens when whatever the situation was? And they'll tell you, this, and then you go watch them, and it's completely different. And you go back and you say, well, you don't do any of this, and they really? Oh, I thought we did. It's not that they're trying to mislead you. A lot of times, it's just they really don't know. And two, people kind of leave stuff out. Oh yeah, well, no, we don't do it for this. So you get all these kind of strange things. So talking to people, while it is very important and it's good, and you learn how to be a good listener. At the same time, it's always good to go. And I'll tell you, like things like internal control manuals and all that kind of stuff. When I first started auditing, I think the first I don't know if I made it a year doing it, but I realized really quickly that these were not the place to find. You had to go watch and see what people were actually doing, because whatever was in there a lot of times was not the reality. So anyway, the things that you see yourself, things that you do yourself, observation, tracing things, doing calculations, those are more persuasive than things you're kind of getting secondhand. Okay. Documenting the understanding of internal control. This is required. And it's done 3 ways. I can't remember which one I had first. Okay, questionnaire. Internal control questionnaire. Okay, internal control questionnaire. Let's go look at it. Here is a internal control questionnaire. And they generally have yes, no answers. Now this one's a little bit extensive, but they can definitely be, this long. And so you'll go through each one of these and you'll ask the, are all employees paid by check or direct deposit? Yes or no? Is there a special bank account used? Yes or no? Are all payroll checks signed? Blah, 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 blah. Okay, so there's all these things you're asking somebody about. Usually it's a controller or assistant controller. Usually someone kind of higher up. Hey. And so you go through these questions with them. And they'll say yes or no. Usually yes means everything's okay, and no means there's a problem. So for instance, our authorizations for deductions signed by the employees on file. If that's a no, okay, well, that might be a problem. They might be deducting stuff from the employee's pay without them signing for it. Okay, so and you go through here, and these are just the assertions. But again, here's the thing too, though. Look at this and be and feel calm, because notice that you don't have to come up with all these on your own. Yeah, there's like 50 things here or whatever, but these are all part of the audit program. Okay, so internal control questionnaire. The pros. Anyone can administer it. Cons. Everyone knows to answer yes. And what I mean by that is, usually a yes means good and no means bad. So, the people that so you have this questionnaire, you go there, you're asking the question. Now, probably isn't that they don't like you, but you're sitting across the desk and they know that if they say yes, you're going to go away. If you say no, you're going to have a bunch more questions, and they have this much work to do anyways. So you can run into the problem of someone's sitting there and saying yes, 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 we do that. Oh, of course we do that. Yes, we do that twice a day. So you run into this that, and again, it's not that they're trying to be evil, but a lot of times it's like, they just don't want more questions. So, and a lot of times the people that you're talking with were in your situation, a few years back, and they know exactly what it is. Okay. It can be done on a flow chart. We can document it. Oh, I didn't go into the anyone can administer it. I'm sorry, let's go back to the internal control questionnaire. Internal control questionnaire. The beauty of it is you can be your first day on the audit, and they can say, here, take this, this internal control questionnaire, go in and talk to the assistant controller, and so they say. So anyone can go do this. You can go. Anyone can administer the internal control questionnaire. You don't have to have experience. You're just writing down yeses and nos. Okay, internal control flow chart. And this is what it looks like. And these are it's kind of a pictorial thing that you'd have this, it's like kind of walking through where they go, here's in the mailroom, we start in the mailroom, we go to the cashier, go to accounts receivable. This is sort of a flow chart is sort of a visual representation of the internal controls. Pros. Let me think here. Let's say once you get used to using them, the internal control flow charts, the auditors can identify internal control weaknesses quickly. You can just look at it and see where the problems are. Once you get used to using them, they're very quick. Con. No one else understands them. So the pros, auditors can identify internal control weaknesses quickly, but once you get used to using them, they are very quick. The cons, no one else can understand them. You cannot take this usually and show it to somebody and say, is this right? They're gonna look at it and say, I don't even know what that is. What is that? Is that a map to Pittsburgh or something? What, so the internal control flow chart it's good for auditors. You can look and find the cons are that don't look and understand. Okay. Last way is written narratives. Pros. Anyone can make them and understand them. Something here. And going down here to the page here, I'll show you what it looks like. So here's a written narrative, and it's just what it says. What do you do? Okay, the senior accountant and account manager perform all the bank reconciliations, review the cash, money market, short terms, and close, blah, blah, blah. Okay, it's a written narrative. It just tells everyone what somebody does. And the nice thing is you can hand it to somebody and say, is this correct? And they can read through it and say, cons are it's a little bit cumbersome. Internal control weaknesses, you look wherever they say no. Internal control flow chart, once you get used to using them, you can pretty quickly find out where the problems is. Written narrative, you got to kind of dig it out. In case you're wondering, first has a T in it. But the real beauty, though, of those are that, writing it out, you can take it to somebody and say, is this right? And they can read through it. And I used to do this all the time. They'd tell me something when I said, I go, okay, I write it up, I read back and go, yeah. Well, except for this here, we use it, this doesn't go here, this goes here, and this goes, So you can actually get a very accurate document because you keep going around in circles and circles until, keep looping it until you get this really accurate document. When I was doing internal auditing, now we had way more time than the external auditors. The external auditors would do inventory and they would take 4 days. We would do inventory, we'd take 4 weeks. So we had a lot more time to do things. And one of the things I would do though is I would do a written narrative. And I'd always go through with the people, do written narrative. And then when I got that really down, that everybody was happy with it, I was happy with it, and I do it, and I could observe and see if it was actually doing this. And then I would make a flow chart, and the flow chart was really just to give it to my supervisor so they could, use the flow chart to quickly look at and see where there's problems at. But anyway, you can get a really accurate document. I think of all of them, I think that one is probably, if you spend enough time on it, that one is probably the best one, because again, you can give it to anybody. You give it to anybody, and they can read through and they know their job, and they'll tell you what is right and what's wrong with it. And where is my okay? So anyway, yeah, you can also combine these. I used to combine this one, a written narrative, and then I would make it into the flow chart. And that was really just to give to my supervisor. Okay, risk assessment. Another one of those things I always think we did, and I don't think we did. But anyway, risk assessment. You are required also to assess the risks. And they're done at 2 different levels. There's the assertion level, which we've already talked about a little bit. And the assertion level, you call the assertions the oh, where's a good place to tuck this in here? Existence, that kind of stuff, existence, completeness, all that. So those are the assertions. Did this sale, does this asset exist? Are all the assets included in there? Those are the assertions. And so this is the kind of one we would normally think about. And generally design tested controls and substantive procedures to figure out whether, those are materially misstated. There's a problem with them. Now, at the financial statement level, these are things that risk the whole company. All right. Managerial incompetence, poor oversight, board of directors. When I was going through college, I worked as a maintenance guy for a bank, and we used to always have to, when they had board of director meetings, I had to go clean up the board of directors. It wasn't really messy or anything like that, but you just had to, line the chairs all up and all that kind of stuff. And the board of directors, about half of them were super sharp, super whatever. And then I remember I think it was like one of the president's wife or something that was on the board of directors, and she'd come in carrying a cat. She'd bring her cat with her to the board of directors. So, I have no idea. Maybe she was very competent, but you get the idea though. Board of directors are not always, the oversight is not always what you might think it is. Who knows? Maybe Cat Lady was the one that ran it all, but anyway. Bankruptcy is always a big risk. Risk the entire financial statements because it puts an added level of problems onto it. Operating rapidly changing industry, and probably the one that almost always comes up is this one, the domineering executive. That's huge. And going back to that Anthony case, that was that Mark Hansen. When you have somebody who, whatever I say goes, that can really run into problems. Okay. I got here a review. I don't know if we did. I think we covered this. I'm not sure. What time is it? Man, I've been talking a lot. Okay, I tell you what. We'll do this little thing here, and then we'll take a break. Inherent risk. Did we already do this?
I don't know. Right now it doesn't look familiar.
Okay. Well, it's not a bad idea to go over it more than once. So, inherent risk, a risk of a material misstatement will occur. Control risk is that the client's internal controls I want to say controls. The client's controls will fail to detect. So control risk is the risk that the client will basically fail to detect the material misstatements. Detect is probably, let me change that, because this is detection risk. I don't want to muddle it. Will fail to identify. How about that? Ah. Okay. Detection risk. This is the risk that the auditors will fail to detect. All right. So these first two are only for the client. The auditor does not have control over those. The only thing the auditor has control over is this, the detection risk. Now, we will assess these two. I'm making a mess out of this thing, eh? Mark. Okay. So these two get assessed, but we can't change them. The only thing that we can change is this. So we'll assess the inherent risk. How likely are they to make a mistake? We'll assess the control risk. How likely are there controls that they will identify the material misstatement? This one down here, we have some control over. What are we going to do to make sure that we don't fail to detect a material misstatement? Now down here, audit risk. Risk that an undetected material misstatement, oops, audit risk is a risk that an undetected, if we detect the material misstatement, that's fine. But an undetected material misstatement will appear on the financial statements. It's kind of like the combination of all these three. If all these things happen, if a material misstatement occurs and internal controls fail and we fail, what's the outcome? That's the audit risk. And there actually is a mathematical formula that goes along with this. And I know that they've had this on the CPA exam at least a couple times. I don't know if any CPA firms actually do this, but anyway, you simply multiply out the risk. So for instance, we have an example, we have an inherent risk of 50%. The risk the controls are going to miss it is 20, and the risk that the auditors will miss it is 30. So we can figure out what the control, the audit risk is.
Point 0.03.
0.03. So about 3%. Finish this up here. Okay. Now, so again, this is a mathematical formula. And like I say, I'm not sure if any CPA firms actually use that, but it has been on the CPA exam before. The one thing that why we talked about management, the integrity of management is so important, so important, so important. Why is integrity of management? Why do we beat that up so much? Who cares if they're nice people or not? Well, the problem you have is this: if management it lacks integrity, these first two go out the window. So now your risk of having a audit failure basically is now not 3%, but it's 30%. You know, it really jumps up. So this has to do with management integrity. It's integrity. You know, we talk about management integrity, you're really talking about that. If that's gone, you know, if they're purposely doing things in the financial statements and they don't want to catch it, and they want, you know, this would be inherent risk will be 100%, this will be 0, then all of a sudden your audit risk really jumps up, you know, 30% or whatever. So this is why management integrity is so important, because it's part of the biggest problems of doing this. Okay, I talked way too long. Okay, let's take a break. We're not going to finish this today. Not even, sorry. Let's say 7:10. Yeah, I think we will go ahead and let's just go ahead and let's save this. Let's go to the sampling practice exam. We may not get through this time. Let's see. But I used to send out the exam and people didn't do as well as I really thought they could have. And one of the things is I think because we, the first part of this sampling stuff was what, 8-9 weeks ago. So good to kind of refresh our memories on all this stuff. So the audit sampling practice exam. We'll go through this. We'll see how far we get through it. We might get through all of it. Let's see. Okay. Is there anyone that did not get this yet? Okay. So, hey, what is the error rate of the test? Anyone?
Are you looking for the formula?
Well, the number. What is the error rate?
Oh,
So they took 300 purchase orders. And this is what they came up with. That of the 300 purchase orders, 285 were okay and 15 were not okay. So what's the error rate?
15.
Well, you're gonna take the 15 and divide it by,
Yeah, I see what you mean. Yeah.
so you take the errors divided by the total sample. Anyone?
0.05.
0, yeah.
Yep.
0.05.
I just did something wrong here. Yes, that is. If I ever learn how to use my computer, I'll show you. Okay. Yeah, so the error rate is going to be 15 over 300. Just like you said, 0.05 or 5%. Okay, so can the auditor rely on the controls? Okay, so what we're going to do is take the error rate plus the allowance for sampling risk, because so the error rate times the or it's not times, plus the allowance for sampling risk. And we're going to compare that to the allowed. Okay, so the error
So
rate,
that, oh,
go ahead.
no, I was gonna say, would that be 0.08? Oh, 0.08.
No, you're right. Yeah.
Oh, okay.
Yeah. You can also just take the 5% too, and just add it to it. 5% plus.
3%.
Yeah. Oops. So the error rate is 5% plus the allowance. And it's allowance for sampling risk, but they usually just call it allowance. Equals 8% is the upper limit. Okay, so let me zoom in a little here. Okay, so this is the upper limit. So this is how bad things could be based on our sample. 5% of them were errors. Plus there's allowance of 3%. This is a sample, it could be worse. So, and we're going to compare that to the allowable or tolerable rate. Oops. Yep. So the most it will allow for, the most we can tolerate is 6%. So are we going to be able to rely on these controls?
No.
No, good. Yeah, these could be off by as much as 8%. The most it will allow for.
Oh, my bad.
No, you said it right.
Oh, I did? Oh, okay.
No, yeah, not your bad. You're good.
Got it.
Yeah, so this 8% is higher. We can't rely on it because the most we'll allow for is this, but according to our tests, these could be off by as much as 8%. So we can't rely on these controls. So no, and this is one of the parts. This is one of the reasons why we're doing this. This one got missed a lot on the test, and it's basically, this is the very most you can allow for. So if the upper limit is higher, you can't take it. Now, if this upper limit was 4, it'd be fine. Yeah, you can rely on it. So no, the control cannot be relied upon. So this is the absolute most that you could allow for. This is the most. I should say at most, maybe a better way to put it. So when you have this upper limit is 8%, it's too high. What is a statement of purchases? Unknown. Test the controls, don't test the dollar amounts. So test the control. If you look at this, what are these? Oh, purchase orders that weren't signed or something. Yeah, department manager signs all purchase orders. Okay, so department manager signs all purchase orders. So the actual misstatement of those unknown. The purchase orders might be fine, and that's another weird thing about internal control is that even if the controls are terrible, the financial statements might be fine. So the question is, okay, would you rather have a material misstatement, or would you rather have a material weakness in internal controls? You'd probably rather have a material weakness in internal controls because your financial statements might be okay. Just because there's a control weakness doesn't necessarily mean everything went crazy. It means that there's possibly that it could have, or it may have, but a material misstatement means that it is misstated by something that would cause you to change your opinion of the financial statements. But it's not uncommon to have a material weakness in internal controls by something that's really bad, and they get a clean audit because the financial statements are fairly presented. Okay, how would the result of the test impact the planned substantive tests of 500 items? Now, substantive tests are to get dollar amounts. And that's all they get, basically. A substantive test, you don't care whether it was signed or not signed. You're just looking at what the purchase order, the amount of it was for. Okay, so let's say you planned on 500 items. So you go, okay, if we can rely on these controls, we can take 500 items. If we were here, if we're at 6% or less, we would take 500 items for our substantive test. Now, we can't rely on these internal controls. So are we going to take more or less than 500 items? If we could rely on the controls, we would take 500 items. We can't rely on the controls.
No.
So we can't rely on the controls. We're going to take, and if we could, we would take 500 items. But now we find out that we can't. So we're going to have more or less. We need more than 500 items to get comfortable with these numbers, or less.
Oh, I think we got less, like, why would we take 500? Why would we go further? Is that?
Oh, no. We've already done the testing. We've already done the testing. So, and we find out we can't rely on them.
Mm-hmm.
But I know why you're asking that, because I think I asked it on the overview. But yeah, so if we can't rely on the internal controls, what we do is we change our plan. We say, okay, instead of 500 items, we'll have to go more. So what would this do? This would increase. So whenever you have weak internal controls, you have to increase the substantive testing.
Is it kind of left up to the auditors to decide that? I mean, that might not be the right answer, but
It's always up to the auditors. It's all judgment, yeah. So, well, you might audit it to a higher level, say, instead of auditing, instead of doing the substantive test to say the 90% level, maybe go and say, okay, let's go to the 95% level. So you're going to increase it. I think I'm going to go through something. Give me 1 second. Let me get this in first. For example, I just made this up. Maybe you take 800 items. If you can't rely on the controls, then you have to rely more heavily on the substantive tests. And one of the reasons why you're doing these test controls, though, is so that you can reduce the number of substantive items. And if you can't do that, then yeah, you would stop, whenever you found that out. Is this test required by the ACCT330?
Yes.
Nope.
Okay.
Well, actually, it's tricky. Here, the ACCT330, no. No, is only required. Audited visitor plans. So AICPA, no, it's only required if the auditor plans to rely on the internal controls. So test the controls. No, they're only required if you are planning to rely on them. And you might just, you might skip this step altogether, this test of controls. Maybe for a number of reasons. Maybe you don't think that the internal controls are very good. Maybe it's just, too much work. You can get everything you need from substantive testing. So there's all kinds of reasons why you may not even want to do the test of controls and just go ahead and take the substantive numbers. For example, let's say that you audit a company that they only have 7 customers. They have 7 big customers. Now, there's only 7 of them. So it doesn't make sense to go through all these tests of controls and all that kind of stuff. You get an understanding of the internal controls, but you probably just do 100%. All of them are probably material. So just do a test on all of them. There's no reason to do the test of controls. Every customer is probably going to be material. So you're going to have to do, pretty much 100% of every customer anyway. So, there's no reason to do test of controls. So AICPA does it. PCAOB, for issuers, yes. So PCAOB is yes. They do require it, not for the financial audit, but for the internal control audit. They do not require it for the financial audit. Eh. I'm gonna do something here. I think we gotta write this in. Upper limit allowable rate. And okay. I'll let you guys pick the numbers. Give me a percentage for the upper limit. Well, 1% through 10%.
Just any percent?
Any percent, 1 through 10.
4.
4. Okay, let's see. What's the allowable rate? 1 through 10 can't be 4. Actually, it can be 4. 1 through 10. What do you want? Just
3.
3. Okay, so here's the upper limit. The allowable rate is 3. Can they rely on the controls?
They cannot, because the upper limit is higher than the allowable rate.
That's exactly right. Can you rely on that? No. And substantive tests, we would have to increase these. Do another one. Oh, I guess we should name them both A. That's a little confusing. How about B? Okay, B. Let's have an upper limit.
I'll shut up and let someone else do it.
Okay, someone else pick a number 1 through 10. You do it in the chat also.
7.
Okay. Someone answer in the chat. Okay, 6. And someone said 6 in the chat, so we'll use that. Okay, can we rely on the test controls? You guys are all talking at once. I can't hear.
Again, no, because the upper limit is higher than the allowable rate percentage, and you would need to increase your, there you go, test.
Okay, let's do one where let's do one where Mark spells that right. Let's do a yeah. Listen, we want a different no, we want a different answer though for this one. So let me give you an upper limit.
3.
3. Okay, now I'm going to pick one.
8.
Are you okay? We can do 8. We'll do 8. Can we rely on it?
Yes.
Yep. Good. We can rely on it. And if it's enough, if you're confident enough, this is kind of a big difference. You might even rely on the internal controls more. It's possible that you decrease your, because it's less likely there's going to be a problem. Okay, D, the last one, I promise. Upper limit. Anyone?
2%.
2%. And I'm gonna go down here. I'm gonna say the allowable rate is 2% too. So the upper limit is 2%, the allowable rate is 2%. Can we rely on them?
Yes.
Yep. Now, as far as our substantive tests, now notice that, these are exactly the same. So whatever our planned, it's probably gonna stay the same most likely. Our substantive test, we're gonna stay the same. And I'm almost positive I talked about this before. I think we did it at the end of the overview handout. That the relationship between tested controls and substantive tests are inverse. So if you don't do any tested controls, that's fine, but then you have to increase the substantive tests. If you do test the controls, the more tested controls you do, the less substantive tests you need usually. So the relationship between test controls and substantive tests is inverse. So let's stop here. This first one here, this is one that most people miss on the test. So this is one I really wanted to hit. But we'll do the other ones next week. Okay. Question anything? You guys want to take a screenshot of that?
Yep, I took a screenshot already. Thanks.
Okay. Yeah, so this the upper limit and the allowable rate. These are, the upper limit is how bad things can get, and the allowable rate is how much will you allow for without, altering anything. Okay, so we didn't finish either one of those. So we're going to stop here. We'll finish it up next time. I don't know what I was thinking. I didn't have you guys grade the dates up. They are up now. If you are missing anything, you absolutely can turn it in without any penalty or anything like that. Obviously, you won't have a grade in there until you do turn it in. But up through the Chapter 6 exam, those are all included in the grade to date in the grade book. And again, and if you didn't get all the points on any of the homework, go ahead and resubmit it, and I can, change the grade. You get for homework, not for tests, but for homework, you can redo them as many times as you want, and I just take the highest grade. So if you are missing something, don't worry about it. As long as you get it in, it should be fine. Any questions? Nothing to turn in this week. Okay.
No.
See you guys. Have a good night. You got out a little early. Yay.
Yay.
Late. All right.
Okay, thanks, Professor. Oh, Professor, I do have a question. Do we do just an FYI, are we meeting the week of the Thanksgiving week, or are we not meeting because it's a Tuesday and Thanksgiving is later in the week? Is school still in session?
Let me check. I think I got that in Blackboard. 11/22, begin Thanksgiving holiday, no classes. Let me see here. We will not have class on the 22nd.
Okay, that's what I thought. I just wanted to make sure, put it on my calendar. Thank
Yeah,
you.
yeah, very good. Okay, yeah, if I don't say anything next week, remind me. Not
Okay. All right. Thank you,
that I've ever
Professor.
forgotten about anything, but just in case.
Absolutely. All
Okay, all right,
right, thank you. Bye-bye.
bye.